Hello, good morning and welcome to another exciting time. We look at business. It is Business 360 and my name is Vladimir Kim. On Business 360 breaking, oil exchange slides as OPEC Plus plans output boost. We begin from there. Oil prices fell for a third straight session after OPEC Plus agreed to raise output by 547,000 barrels per day in September in a bid to reclaim market share amid potential supply disruption. The supply disruption tied to Russia. Multiple observation indicates that Trump has threatened 100% secondary sanction on buyers of Russian crude, potentially jeopardizing up to 2.75 million barrels per day of seaborne exports, mainly to China and India. First, let's look at the markets, the energy market in this regard, amid the impacts of the sanctions. Let's look at the energy market. Energy Perspective has spoken about it, and numbers in terms of crude oil per barrel. Well, crude oil, which represents U.S. crude, price level stands at $66 US dollars per barrel. And we're talking about the energy that comes with it then. A price dropping 0.857 point, a negative 1.27%. A Brent, which represents Nigeria's price benchmark, price level stands at $68 US dollars per barrel, falling 0.914 point, a negative 1.31%. Natural gas on a negative, gasoline on a negative, heating oil also on a negative, even the price of coal also falling. A sanction having an impact on the price of the energy commodities. Still on the foreign scene, more than 3,000 Boeing defense workers went on strike today in a fresh blow to the embattled aviation giants. It comes after union members at operations in Missouri and Illinois who built F-15 fighter jets and other military aircraft voted against the firm's latest offer over pay, work schedules and pension. They are disappointed that employees rejected an offer that featured 40% average wage growth, according to Dan Gillian, the vice president of Boeing Air Dominance Unit. Boeing is struggling to turn itself around after a series of problems, including safety issues and a damaging almost 8-week walkout by passenger plane workers last year. Africa has announced a significant change to its immigration policy by introducing an electronic e-visa system that specifically targets non-African nations. The initiative intends, talking about Senegal now, the initiative intends to enhance the country's migration infrastructure, administrative capacity and transparency. The e-visa system is based on reciprocity, impacting citizens of countries requiring visas for Senegalese travelers. Still in Africa and now South Africa. The government of South Africa has announced plans to draft emergency measures to support local exporters affected by U.S. newly imposed 30% tariff, a policy shift affected or expected to severely impact the country's automotive and agricultural sector. Negotiations with the U.S. are open, while efforts to finalize a support package for impacted sectors continue in South Africa. In Ghana, in a bold diplomatic gesture, Ghana has waded into the complex politics of the Middle East by dispatching 40 metric tons of cocoa-based relief aid to the people of Palestine. President Mahama emphasized the gesture as a symbol of solidarity and practical support for affected Palestinian families. The donation was accepted by the Palestinians' ambassador and aims to alleviate hunger and food insecurity in Gaza. Regarding Nigeria, a recent statement by British Business and Trade Secretary Kemi Badenoch declaring that she no longer considers herself Nigerian, has drawn sharp criticism from both the Nigerian diaspora and political figures. Speaking on the Rooseport podcast with Gals Brandesh, Bananox revealed that she hasn't renewed her Nigerian passport in over 20 years and now fully identifies with the United Kingdom, where she lives with her family. She said, and I quote, "I'm Nigerian through ancestry, by birth, despite not being born there because of my parents. But by identity, I'm not really," she said, adding that she knows the country very well, with a lot of family there, and that she is very interested in what happens in Nigeria. The comment struck a nerve in Nigeria, where national identity and diaspora pride remain deeply significant, especially when expressed by someone of Nigerian heritage in such a prominent international role. The debate raises broader issues about diaspora identity, cultural heritage, and perception of national belongings. Selling Nigeria. The Director General of the Securities and Exchange Commission, Amomotimi Agama, has raised concerns over the growing number of suspicious cryptocurrency transactions in West Africa, revealing that GABA reported $2.1 billion in such transactions across regions in 2024. Speaking at the West Africa Compliance Summit organized by GABA in Praia, Cape Verde, recently, Agama noted that while virtual asset adoption is expanding rapidly, it has also attracted malicious actors, with terror groups exploiting privacy coins to evade detection. According to him, artificial crashes, unregistered exchanges absconding with funds, and inadequate oversight have resulted in significant losses for investors. Regulation, therefore, is not optional but an imperative, he added. And now to the power sector in Nigeria. Nasarawa State has become the 12th Nigerian state that now regulates and oversees the electricity market in Nigeria. This follows the Nigerian Electricity Regulatory Commission (NEC), the transfer of regulatory oversight of the electricity market in the state to the Nasarawa State Electricity Regulatory Commission (NASAC). NEC disclosed this in a statement over the weekend through X. According to NEC, the move was in compliance with the amended Constitution of the Federal Republic of Nigeria and Electricity Act 2023 as amended. It directed Abuja Electricity Distribution Company to incorporate a subsidiary to assume responsibilities for intrastate supply and distribution of electricity in Nasarawa State within 60 days from 4th August 2025. All transfers envisaged by the order, NEC says, are to be completed by 3rd February 2026. NEC had earlier transferred regulatory oversight to Edo, Ekiti, Enugu, Imo, Kogi, Lagos, Niger, Ogun, Ondo, and Oyo states. The Commission added that full regulatory oversight will be transferred to Plateau State on 12 September 2025, while preparatory transfer readiness notices have been received from Abia and Delta. Meanwhile, 220 oil blocks are abandoned amid dates and crude crisis in Nigeria. Nigeria currently has 220 open oil blocks scattered across its onshore and offshore basins, data from the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) has revealed. This is despite its growing debt, the debt burden, and crude shortages affecting local refineries. The NUPRC data showed that a deep offshore terrain accounts for the highest number of unlicensed blocks at 59, highlighting the country's underexploited energy wealth in its most technically advanced but capital-intensive region. The Benue Trough follows with 41 open blocks, while the Chad Basin hosts 40. In the Sokoto Basin, there are 28 blocks yet to be awarded, and the Bida Basin has 16. It was disclosed that even in more mature areas, the idle blocks persist. The offshore Niger Delta, often considered the backbone of Nigeria's oil production history, still holds 7 open blocks. The Anambra Basin has 18 open blocks, while 8 each remain unlicensed in the Benin Basin and the onshore Niger Delta. According to a publication by the NUPRC, 24 blocks were recently awarded from the 2022 and 2023 Deepwater Mini Bid round and the 2024 licensing round. On the strength of the recorded successes in exploitation developments and production, the Commission said it is evident that the Nigerian deepwater terrain is endowed with enormous hydrocarbon resources. And now we'll go on a quick break, and when we're back, our Business 360 continues, still looking at a perspective within the context of Nigeria, and afterwards we'll also look at global economic standings and the markets. Don't go anywhere. Welcome back. Still looking at Business 360. And my name is Blyden Ukem. Still in the context of Nigeria. A fresh data from the downstream regulator of the oil sector has revealed that marketers have resumed large-scale importation of refined petroleum products, choosing not to patronize local refineries. Based on the latest fuel supply data obtained from the Nigerian Midstream and Downstream Petroleum Regulatory Authority, a staggering 71.38% of Nigeria's daily petrol consumption in May and June 2025 was made through imports. The remaining 28.62% was sourced from the $20 billion Lekki-based Dangote refinery. This indicates that marketers who are expected to access products locally but east in the country are instead spending the country's scarce foreign exchange to import refined petroleum products. The NMDPRA disclosed this during a presentation to the Federation Accounts Allocation Committee for the month of June 2025. So looking at the oil sector, Nigeria's Dangote Group has appointed David Bird, a former Shell executive and ex-CEO of the OQ8 refinery in Oman, as chief executive of its refinery and petrochemical division. Bird's appointment aims to drive Dangote's Pan-African growth strategy and optimize production at its $20 billion refinery complex. Dangote plans to allow Nigerian ownership in its refinery operations and list shares on local and international exchanges. Still in Nigeria, charcoal trade endangering forest sustainability, the federal government warns. The federal government of Nigeria has stated that charcoal trade is a threat to forest sustainability and livelihood in the country. The Permanent Secretary, Ecological Project Office, Office of the Secretary of the Federal Government, Dr. Ashetu Ndayako, said this at the opening of a one-day stakeholders dialogue on charcoal production and forest conservation recently. The event, organized by the Center for Renewable Energy and Action on Climate Change and supported by Eco Energy, themed Trade and Trees, Rethinking Charcoal Production and the Vanishing Forest. Ndayako, who spoke on the topic charcoal trade, forest loss and ecological challenges in Nigeria, said that charcoal trade was a significant source of household energy for millions of Nigerians, particularly in rural and peri-urban communities. She noted that the largely informal and weakly regulated trade had led to devastating environmental consequences, including deforestation, ecosystem collapse, and biodiversity loss. Meanwhile, the Center for the Promotion of Private Enterprise, CPPE, wants special attention to be given to the sectors of the economy that were contracting or in recession, as it projected a $450 billion economy by year-end. The score was made in the CPPE's statement in Nigeria's GDP rebasing, a first quarter 2025 GDP report and sectoral analysis signed by the Managing Director, Chief Executive Officer, Dr. Muda Yusuf. Analysis of the latest GDP report indicated that 37 sectors recorded growth, many however slowed, 9 sectors contracted, and 3 sectors were in recession as of the first quarter of 2025. The agency projected that the GDP could reach an estimated $450 billion by year-end if the Nigerian economy progressively recovers from the shocks of the current economic reforms without any major disruptions. Meanwhile, the federal government has mobilized over 70 billion naira in private capital through public-private partnerships to drive its Renewed Hope housing program, a flagship initiative aimed at addressing Nigeria's housing deficit. The Minister of Housing and Urban Development, Ahmed Musa Dangewa, officially opened the 19th edition of the Africa International Housing Show, unveiling a bold new state-by-state home ownership and housing development campaign as part of the federal government's renewed drive to close Nigeria's housing gap. This was disclosed in a press statement signed by the Special Assistant Media and Strategy, Federal Ministry of Housing and Urban Development, Mark Cheshire. And now to global economic standings around the world. First, looking at the state in Morocco as Morocco jobless rate falls to two-year low. The unemployment rate in Morocco decreased to 12.8% in the second quarter of 2025, down from 13.1% in the same period of the previous year. It marks the lowest jobless rate since second quarter of 2023, as the number of unemployed dropped by 38,000 to a six-quarter low of 1.595 million, while the number of employed increased by 5,000 to a two-year high of 10.863 million. Meanwhile, the workforce declined by 32,000 to 12.458 million. The unemployed rate among young people declined to 35.8% from 36.1%, while it dropped to 19% from 19.4% among graduates and declined to 10.8% from 11.7% among men. Among the employed, the construction sector added 74,000 new jobs, the services sector created 35,000, and the industry sector contributed 2,000 jobs. Meanwhile, the agriculture, forestry, and fishing sectors saw a decline of 108,000 jobs. And now to the markets as gold edges down as profit-taking seen. Gold edged down to around $3,350 per ounce today as investors took profit after prices rose the most in 2 months on Friday, driven by safe-haven demand and growing bets on an interest rate cuts. President Donald Trump last week unveiled new tariff rates ranging from 10% to 41% on imports from dozens of countries, are set to take effect on August 7th, reigniting global trade tensions. Adding to economic concerns, U.S. employment growth in July came in weaker than expected, signaling potential cracks in the labor markets. Let's quickly go to the market and look at the price of the metals. The metal market first. Afterwards, we'll look at that of agriculture and industrial markets. The metal market begins with a price of gold at $3,359 per ounce, falling 3.6 points this morning, negative 0.11%. From a weekly point of view, gold had gained 1.33%, while the start of a new week, a start of a new perspective. Our silver price at $87 per ounce, gaining 0.334. This morning, 0.9% appreciation. Copper upward, gaining 0.59%. Steel price, no significant change in the market much, but on a slight decline, dropping 9 points. Lithium, no change in the market. And now let's look at agricultural commodities. Agricultural commodities indicates the price of soybeans at $960 per bushel, falling 1.09 point, negative 0.11%. Wheat price at $513 per bushel, dropping 2.82 points, negative 0.55%. Lumber gaining 3.5 point. Palm oil price at 4,245 Malaysian ringgit per ton, falling by 32 points this morning. And now to industrial markets. Industrial markets would have its benefits differently. The price of bitumen stands at 3,556 Chinese yuan per ton, falling 87 points. Cobalt, no change in the market for cobalt. Lead price gaining 1.55 points. Aluminium price gaining 10 points this morning, and tin gaining 668 points at 2.04% appreciation. And now to the forex market as dollar steadies after job-driven sell-off. The US dollar index edged up towards 99 today, stabilizing after falling more than 1% in the previous session as traders reassessed the Federal Reserve's policy outlook. A Friday's week job report showed non-farm payrolls rose by just 73,000 in July, far below expectations, with prime ones revised down by 258,000, pointing to a deeper level market slowdown. Markets are now nearly fully pricing in a Fed rate cut in September, with over 63 basis points of easing expected by year end. From the market perspective, the dollar has really struggled the most against the yen. And now let's go to the market. The euro against the US dollar, and afterwards we'll look at the state of the naira. The euro US dollar market. The euro US dollar price level stands at 1.155 points mark, a slight gain for the dollar and a weakness for the euro, negative 0.27%. A pound against the US dollar price level stands at 1.32 point mark. Not much of a significant change in that market. Let's look at the US dollar against African currencies. A US dollar against African currencies, beginning with the state of the naira, 1,521 naira equaling $1. The dollar falling by 12 points against the naira being strong, and the South African rand, 17 rand equaling $1. The dollar also falling against the rand, negative 0.37%. The Zambian kwacha also being stronger than the US dollar, 22 kwacha per US dollar. The dollar also falling in that regard, falling against the major currencies in Africa. Let's look at the state of the cryptocurrency market as we close. Crypto market indicates the price of Bitcoin as 114,492 US dollars for one Bitcoin. Bitcoin gaining 275 points, a 0.24 percentage appreciation, and Ether at 3,551 US dollars for one Ether, gaining 54 points. Binance on the positive, gaining 7.5 points. Cardano, Solana, Ripples all positive this morning. Well, there's a structure of the market and the business world and the direction that comes with it. And here we draw the curtain in today's edition of Business 360. Thank you for being a part of it. My name is Blyden Rukem, and thank you for watching.